everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. Now today, well, it's FOMC day, right? So with FOMC day around the corner, we've got that coming out a little bit later at 1400 Eastern. The markets tend to be a little bit sloppy, choppy, can be pretty volatile, and then just die for the next hour. They can be kind of crazy. A lot of traders will choose not to trade FOMC day, and I mean, half the time I can't blame them. So keep that in mind when we're looking at the charts. There's lots of back and forth and a lot of difficult movement overall. So if you had a hard time today, well, I don't think you're the only one. Now, the overall movement that we have in the Nasdaq, we started off inside yesterday's range, right? Yesterday started with that beautiful run to the upside and then gave most of it back before returning back to the highs. That shows that we're probably going to see some exhaustion at the top, and sellers came in into the end of the day. Now, we opened up, gap up very small, but inside this big bear bear drop, I suppose, anti-rally to the downside, with the first candle of the day being bull, and then completely failing down, slamming lower on a massive bear engulfing candle. So that is showing that the sellers may want to try to continue this. Maybe they're looking for a new leg down, maybe they're looking for a new low of day, breaking the prior low of day, etc. But if that's the case, why isn't the follow-up candle strong? What happened to the sellers? If the sellers are going to be driving this lower, they should have been able to continue with a little more strength than this. And there's a lot of wick on the bottom showing that, well, if they were going to attempt it, maybe they're not willing to sell at the lows. So we'll wait to see a bounce and see what happens. We get a bull bounce, and it is sold right back off. That's a good sign for the sellers. But again, we run into the same situation. Where are the sellers? The sellers can't even trigger in underneath the bear candle's low. Something is obviously wrong here in that the sellers aren't even showing up to the party anymore. They tried, and then they just sort of gave up. So the fact that they're not even here anymore allows the buyers to take it up. And if they missed that one, waited for a little more confirmation when the market came back down, failed completely at the lows, and shot right back up, closing near its highs, it's another really good signal to drive the market back up. That ended up leading into a very strong move higher, and that move up basically was so strong, breaking above the moving average, breaking back above that big bear attempt, that the buyers are likely going to at least give it a second attempt. Now, the one big clue here is that when we hit the high of that big breakout candle earlier, we couldn't close past it. Right? So that doesn't necessarily mean that we're putting a top on the market, but it does mean that the sellers are at least attempting to defend it. We get a bear candle down, buyers buy into it for a move back up. And then overall, what happens? Well, we still can't close past it. The bears try, they don't get anywhere. We finally get a bull breakout above it, immediately fails right back down. Big red flag, something is wrong. The sellers are now defending the highs and they are taking back over, and that allows for the sellers to drive the market back down once again. So overall, just a great day, all things considered, right? FOMC day is traditionally a not so fun day to trade, but just a good combination of market psychology along with technical analysis. It allowed for some okay opportunities today, although not the best. Could have been better, could have been a lot worse too. So that's going to do it for this one. Hopefully you found it interesting. Maybe you learned something and maybe a little bit entertaining, and we'll see you next time. Have a good one. Bye.